12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum.
12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. We need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
Welcome back to Squawk on the Street. I'm Carl Quintanilla with Sarah Eisen, David Faber at Post 9 of the New York Stock Exchange. Markets responding to some relief regarding Hong Kong as they withdraw this extradition bill. Some decent data in China also helping the Dow gain 167.
That is where our roadmap for the hour begins. Hong Kong, Brexit, international trade data, stocks rebounding. We'll break down what's behind today's rally.
Plus, former Fed Chair Alan Greenspan is going to join us exclusively, get his thoughts on the market volatility and the Fed.
And Tesla's newest competitor, Porsche, announcing its first fully electric vehicle. We're going to have the details next.
First up, stocks rallying with Hong Kong leader Carrie Lam announcing the withdrawal of a controversial extradition bill that led to months of protests and impacted the economic climate there. Some protest leaders say demonstrations will continue unless other demands are met, including calls for greater democracy. Still, guys, the reaction was very strongly positive for the Hang Seng. That's the Hong Kong stock market carrying over into overseas. I guess the hope is between the capitulation from Hong Kong, i.e. China, on the extradition bill, which set off this whole protest 13 weeks ago, is what's it going to mean for the U.S. and the U.S. economic data? The very sensitive manufacturing sector to all of this trade. We did see the first contraction yesterday. Next up, we'll look for the services number on Thursday and see if it's impacting the bigger part of the economy. In other words, that uncertainty about trade. We saw it in trade data today in terms of lower imports of capital machinery and lower exports to places like China.
Yeah, we know what's happened to consumer sentiment, and I think Morgan Stanley's big point this week was that all that's standing between us and a recession is a weaker consumer. But if they hold in and sort of belie what we've seen out of Michigan and Conference Board, we'll see. Retail sales have been holding in there. Obviously, we know that.
Seems to be very few signs of a weak consumer. Yeah. I mean, Sarah, have you seen, is there anything you can point to that would sort of reflect
consumer
a weakening consumer
There have
confidence?
been some mixed signals lately. I mean, we got to watch those numbers because we've seen it dip, but we can also see that very sensitive to the stock market, and we saw August as a very turbulent month. So we'll look for that. I think the other thing standing between us and a potential recession would be stimulus, which is coming from all sides of the world right now. The ECB expected to do more. BOJ members talking about preemptive action. Fed members like Bullard of St. Louis talking about surprising the market with a cut. So how much can monetary policy step in to prevent any kind of slowdown on trade? That's the biggest debate, and I don't think anyone, including Fed Chair Jay Powell, knows.
Speaking of stimulus and trade, the big cue for investors this month is going to be action from global central banks, including the Fed's interest rate decision. Of course, not the only game in town around the world. Take a look at some of the others. Joining us in a CNBC exclusive is the longtime former Fed Chair, Alan Greenspan. Alan, it's great to have you back. Good morning.
Thank you. It's a pleasure to be back.
Where should we start? I guess since we're in the month of another Fed meeting, and since we're getting a ton of speakers today, maybe you can throw your 2 cents in and tell us what you think the Fed should do.
I tell the Fed in private what I think they ought to do, and that's the last I hear of it.
What about this notion of the economy weakening, potentially recession risks picking up? Alan, how do you see the U.S. outlook for the rest of the year?
Strangely enough, it's going to depend in large part on the stock market because we underestimate the wealth effect on the economy, and this type of volatile stock market moves. It has an impact which I don't think we fully understand nor measure correctly. Overall, the economy seems to be sagging. Longer term, of course, I've made the point that with the entitlement surge as we age in the population, we're draining gross domestic savings from the economy dollar for dollar, the data show. And that implies that it's undercutting capital investment from which is heavily financed by domestic savings. The problem at this stage is that it's not clear where the markets are going, but let's not rule out the fact that they are in and of themselves critical fact. Econometric analysis says effectively that a 10% rise in the S&P 500 has a 1% effect on overall GDP. That is not a small number.
No, it's not. What about the trade war and the tariffs and the fact that we're starting to see it more prominently feature in ISM weakness and manufacturing weakness in this country? How much do you think that is slowing the global economy, and how much do you think it's a headwind for the U.S.?
Well, I think it's, first of all, it's a major global issue. I don't think this thing is caving in, so to speak, but that it's eroding and it's weak, I think, is unquestionable. I think it's important to recognize that if we get major stock market adjustments, we're going to feel it in the economy with a very short lag.
So, I mean, do you think the prospect of, I saw a headline that you were talking about the idea of negative interest rates potentially happening in this country. Do you think that's something possible? And if so, what would it signify?
Well, first of all, what it signifies really is that the world population is aging, and that people are recognizing that they're dying off at a much later date than they originally contemplated when they started to save. And as a result of that, there's been an endeavor to pick up fairly quickly. Like the U.S. Treasury 30-year yield is terrifically useful, I would say, offset to the other things that are going on in the market. It's a real-time asset. And one of the reasons the gold price is rising as fast as it is, at $1,500 a troy ounce, that's telling us essentially that people are looking for basically resources which they know are going to have a value 20 years from now or 30 years from now as they age, and they want to make sure that they have the resources to keep themselves in place. That is a clearly fundamental force that's driving this, but we don't know how far it'll go.
How far, Chairman Greenspan, do you think it could go? To Sarah's question, and others have pointed this out as well, given negative rates around the globe on over $16 trillion in assets. Do you think it could actually visit our shores as well?
Well, it's hardly likely that it's been, for example, take a look at Japan. You can see it, quite visually as the population goes down. And you can see it pretty much throughout the world. It's just a matter of time before it's more in the United States. And I think the issue here is watch the 30-year U.S. Treasury yield. That's going to tell you what's happening.
Although you said in recent days that it's just another number, doesn't necessarily mean it's something symbolic other than it's below zero. Can you expand on that?
Yeah, in other words, basically, we're so used to the fact that we don't have negative interest rates, but if you get a significant change in the attitude of the population, they look for coupon, and as a result of that, there's a tendency to disregard the fact that that has an effect on the net interest rate that they receive. In short, what the buyers of 30-year treasuries now, who are looking for that 30-year away guarantee, they're paying for it up front in other parts of the valuation process.
Chairman Greenspan, I'd like to come back for a second to this idea that you introduced of the wealth effect of the stock market and how important it is in terms of at least gauging even where rates should be. Do you think the Fed is appropriately sort of measuring the volatility of the market and or the wealth effect or lack thereof at this point in its deliberations about future policy?
I would assume so. They know what's going on much better than the rest of the world, frankly. So I find it very difficult to believe that they're not on this with some degree of analysis.
What do you mean they know what's going on better than the rest of the world?
I'm sorry, try me again.
What do you mean they know what's going on better than everybody else? I mean, that is a question right now about who knows best for the Fed. Is it the president who's calling for easing? Is it the market that is pricing in more aggressive easing? Or is it the Fed itself?
It's the Fed itself. Let me say this. Once a Fed governor gets appointed by the President of the United States, whomever that may be, and then gets essentially voted positively by the Senate, it is very difficult, short of a major malfeasance, to get that person out of that office. There has never been anybody in the history of the Fed who has essentially basically been taken out of office for malfeasance. I don't think there ever will be.
So you think the chances of the president somehow replacing Fed Chair Powell are nil?
Less than that, if I could find a number.
I assume you've read Dudley's op-ed from a week or two ago. He's got another one out today in which he reiterates that the Fed should essentially not enable the White House's trade tariff policy. Is he over his skis? Can you imagine yourself ever writing something like that?
I'm sorry, who are you referring to?
This is a former Fed Governor Dudley.
Bill Dudley, former New York Fed president.
Oh, well, no. He's a very good economist. You've got to understand that people have different views within the Fed, but what makes the Fed a very effective organization is when it comes together, it has an extraordinary sense of where the economy is going. And having been there for almost 20 years, it doesn't matter who is chairman, it doesn't matter who is in particular positions, but the overall effect of the research operations within the Federal Reserve is nothing short of impressive.
Chairman Greenspan, do you think central banks, especially those in Europe and Japan right now, have the ammunition and the tools to fight another slowdown and potential recession?
I think they're going to have difficulties largely because I think equity prices are going to adjust more than we have had over the past. Remember, we've had a very sharp change in the attitude towards the 30-year Treasury. We originally thought that the 30-year Treasury was going to stay up in the 3% yield area, and it's come down quite unexpectedly because there's been a change in the attitude, the time preference, so to speak, of the population towards seeing that they're going to live longer lives and they're going to need to finance those longer lives well in advance, like now.
Sounds like you're saying the idea of ultra-long paper, which has been floated in the past couple of weeks, could actually happen.
I'm sorry, ultra what?
Ultra-long paper, 50, 100-year-old debt.
No, I've never heard of it, but this is going in a direction. In fact, if I had thought about it, I would say it's inevitable that one of those, there's some place in the marketplace which will try to hedge on something that's extended beyond what we see now. The answer is I have never seen. It sounds awfully bizarre, but so did a 30-year Treasury at under 3%.
And finally, Chairman Greenspan, coming back to equity markets, which you've mentioned a number of times, are you concerned? Are you forecasting in some way some sort of a correction in equity markets?
Well, remember that we're now in a period where if you're a chartist, you're probably getting a little nervous the way the markets behave. But these markets are now so sophisticated that it's other than the general view that there's a bias towards always being invested in common stock or other forms of equity. I won't get into the reasons, but it's a well-known phenomenon. And I think aside from that, as an economic or financial policy, I find it very difficult to pick something out of the market that it does not already know.
A lot of people, Chairman Greenspan, would take issue with your assertion that the Fed knows best, considering, this Fed missed the housing market crisis. I mean, the Fed has missed recessions in various periods of time. And even this Federal Reserve Chairman has really pivoted to patient and easing in a pretty quick way following the markets. So how would you respond to some of that criticism?
I would basically say, remember that there is nobody who calls the market correctly all the times. But having watched the way the Fed functions for, as I said, almost 20 years, as an organization, it's the best I've ever seen. And I've been around for quite a long while.
This we know. Dr. Greenspan, good to see you. Alan Greenspan joining us, talk about the markets and the Fed. We'll see you next time. Interesting to get a sense of where his radar is truly focused. Obviously, the 30-year change in sentiment there, and stock prices, and as you said, glowing things to say about this particular Fed.
Yeah, I mean, clearly a very strong defense there of the Fed's independence, of its credibility, which is important at a time right now where people are saying that the Fed is politicized. Even Bill Dudley, former New York Fed president, his clarification of his controversial op-ed today did say that there are going to be questions at the September meeting if they cut rates about whether they're just trying to acquiesce to a president who's begging them to cut rates, or to the market even, who's also pushing them to cut rates.
How many years have we passed irrational exuberance? What was it, 96? I think it was, right? So it's almost 23 years.
I think it's interesting that he said that the market will determine whether we head into recession or how the economy does, because there's such a clear economic link between how the stock market does.
Yeah, I thought it was interesting how often he came back to the equity markets, I thought, which is why I mentioned irrational exuberance, which was a little early.
Yeah.
A little early.
When we return, watch out, Tesla. Porsche announcing its first fully electric car. We've got the details next. And as we head to break, a look at the top performing stocks on the Dow. Intel, Nike leading the way. Let's walk on the street. We'll be right back.
Through the AT&T network.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. with the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Oh, found one of our new Vauxhall Griffin editions.
Yes. What comes as standard?
Standard? Well, alloy wheels, sat-nav, aircon, DAB radio, Bluetooth, smartphone projection and USB connection.
Wow. Is that everything?
Sorry, forgot the colour touchscreen.
Buy a new Griffin edition, Adam, Astra, Corsa or Mocha X Plus and get a whole host of features as standard. The Griffin edition range. All Griffin, no bull. Visit your nearest retailer now. Vauxhall, British brand since 1903. Participating retailers only. Limited units while stocks last.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Porsche unveiling its first fully electric car, the Taycan. Our Phil LeBeau joins us this morning with a special guest. Hey, Phil.
Hey, Carl, as backdrops go for a new car reveal, doesn't get much better than this with Niagara Falls behind me, but this is the real eye candy today. This is the new Porsche Taycan. Goes on sale later this year. That's when deliveries begin. Let me bring in Detlef von Platten, who is a member of the Porsche Board of Directors. Detlef, let's start first off with the vehicle. Why do you believe this is the right time for an all-electric Porsche?
I think we worked very, very hard. 4 years of development with a lot of complex issues. I believe it was even more complex than we initially expected, because the main challenge for us was not just to make an EV, another EV, but to make out of this car a true Porsche. Maybe able to transfer the soul of a 911, of a 718, of a Cayenne in this car. And I think we're very proud of what we're showing today.
I had a chance to go for a test ride down at your facility in Atlanta a couple of weeks ago. 0 to 60 in 2.6 seconds. It has the handling, the feeling, the acceleration of a Porsche. But some people are going to look at the price tag that you announced this morning. $150,000, $900, $150,000 for the base model of this, and they'll say, wow, that's pretty rich. Is there demand at that price point?
It's a good value. And
a good value at $150,000.
I mean, we are starting top down. We are showing today the top models. We'll bring more affordable models in the future. We wanted to show what we can do. That sustainability doesn't mean sacrifice. That this car has a typical Porsche performance. We can have acceleration in a row, not just 1 or 2 times. You can have the power output in a very, very permanent, constant way. We wanted to have the Porsche driving dynamics, driving with all the features you know from the 911, the rear axle steering and all this stuff. This car is not just a car, it's a true Porsche, and we show this here.
How much did you benchmark Tesla and the Model S or any of the Tesla models in saying, we know that they're successful when it comes to electric vehicles, we've got to make sure that we have at least what they have and then some?
Frankly, we are getting this question very often. But here in this case, we really focus on ourselves. We define clear goals from us. And this was to just bring all the tradition into the future, all the racing experiences we have made with the 919, the racing in Le Mans, and all this stuff in this car, so that when you drive it, you can say, I feel it, I smell it, it drives like a Porsche. Tesla, I think, deserves a lot of respect. They have created a lot of attention on the EV market. I think the EV market is getting to a turn point, but for us it was more important to concentrate on what we wanted to achieve and to make it a real high-performance sports car.
So do you expect most of your buyers to be previous Porsche owners, or do you expect to take away some Tesla owners?
Actually, we are very, very well excited about the feedback, the first peak. Without even showing the car, we have registered more than 20,000 people worldwide being interested in the top models. And I think it will continue as soon as we have revealed this car. And interestingly, we have seen that 50% of this interest raisers are people not known as the Porsche brand.
Do you know how many of those are Tesla owners?
I don't know. We'll see. I'm happy to get them, and we welcome them.
So from your perspective, last question here, and I think Sarah has a question for you. Sarah, do you have a question for Detlef here? Well, I thought she did. She does not. So let me ask you the final question. Why do you believe the time is right for electric vehicles to take off, not just here in the U.S., but around the world?
I think if you look at everything happening at the moment in North America, in Europe, you're seeing a turning point for a customer who wants to drive, to be able to understand what sustainability can mean to change the world, to contribute to that. Infrastructure has made a lot of improvements, so not to be concerned and having this fear not to find a charging point. This has changed. This is changing very rapidly in North America. We're seeing a lot of things.
And you think it's accelerating?
Yes, absolutely. So the turning point has changed. The train has left the station. It's coming.
Detlef von Platten, board member for Porsche on a very big day, guys. Yeah, it starts at 150,000, but they believe it's going to be very successful, not just here in the U.S., but around the world. Guys, back to you.
Thank you.
All right, Phil, thank you. Phil LeBeau. When we return, former Domino's CEO Patrick Doyle, his first interview since leaving the company on the heels of a big announcement, his new partnership with the Carlyle Group, and much more on the U.S. consumer. Squawk on the Street will be right back. Dow's up 151. Don't go away.
As a principal, I can tell you this.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
At the Bank of Antandek, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Good morning, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Aerial footage shows scenes of utter devastation in parts of the Bahamas in the wake of Hurricane Dorian. At least 7 deaths have been reported. Dorian now setting its sights on the U.S. East Coast. WCAU meteorologist Crystal Cly has the forecast for us. Hello, Crystal.
Hi, Sue. And Dorian's moving at 105-mile-per-hour winds, moving at 8 miles per hour to the northwest. You can see that latest track, keeping it at a Category 2 strength storm and driving throughout the rest of today northward. It will then make that hook to the right overnight and on into parts of Friday, where the biggest concern will be from Savannah all the way up to Cape Hatteras. Those locations seeing storm surge of possibly up to 8 feet and rain totals possibly up to 15 inches. That's the latest, Sue.
Thanks so much, Crystal. Meantime, the Dallas Cowboys and Ezekiel Elliott have agreed on a $90 million 6-year contract extension that will make him the NFL's highest paid running back. $50 million of that will be guaranteed. Cowboys owner Jerry Jones commented on the signing on Squawk on the Street a bit earlier today.
I just turned my pockets out upstairs. It means I'm $100 million lighter as of this morning. But seriously, Zeke has been arguably our best player. We're glad to get him booked in. We're glad to have him on the team.
What's not to be happy about? That's the news update this hour, guys. I will send it back downtown to you, Sarah.
Oh, yes. We're all over it, Sue. Thanks. Goldman Sachs holding its annual retail conference today with executives dealing with ongoing trade tensions and tariffs. Some news coming out from various companies. Our Courtney Reagan joins us live from the conference with some highlights. Courtney.
Hi, Sarah. There is a lot to talk about. The CEOs, of course, being asked here at the Goldman Sachs conference about their best tariff mitigation strategies, their expectations for the second half, what inventories will look like, as well as even store bases over the next 2 years. And as you can imagine, the health of the consumer is front and center here today. Starbucks CFO Patrick Reismer was among the first to present, and he said he does believe that the U.S. consumer is healthy and that the greater macro environment is helping his business here domestically, even though the company did set its profit forecast for the year below analyst estimates. Also today, Tapestry CEO is new. And this, of course, is the parent company for Coach and Kate Spade. I had an opportunity to speak to GD Zealand very briefly. He says he also believes that the consumer environment is healthy in this country, and he believes that that's going to help propel their multi-brand strategy forward in the coming years. Tariffs, though, of course, a very big point of uncertainty for many retailers, particularly if a number of companies end up passing along those higher costs in the form of higher prices, and then that depresses overall consumer discretionary spending. That is a pretty big concern, especially if you're an apparel company, for instance, because apparel has been very deflationary over the last several years as volume has grown. They're going to have a really hard time pushing forward those higher prices. Sarah, back over to you.
All right, Courtney, keep us posted. Thank you. Elsewhere in consumer news, the Carlyle Group announcing its plan to partner with former Domino's CEO Patrick Doyle. This as the global investment firm eyes consumer retail companies that are pushing into technology. Patrick Doyle joins us here at Post 9, his first interview since stepping down as Domino's CEO. And the world was wondering, Patrick, where you would end up. It's been a year since you stepped down at Domino's. Tell us about this new partnership.
Yeah, I'm really excited. So, I took a little bit of time off and, was out hiking in Montana and enjoying things, but also thinking about what was going to make sense for me to do next. And really ultimately decided there's this opportunity to buy great businesses with great brands and cash flow that may need help figuring out how to transform with technology. And so spoke to a few groups, and Carlyle's fantastic. I mean, Carlyle with their global reach, with the scale that they have, the expertise, really a terrific team that is focused on growth as the way to create value. It just is a perfect partnership. So we're going to go out and look for some businesses that are existing businesses that can use technology to transform them, frankly, a lot like, how we ran the play at Domino's.
Tell us more. So size of business, public, private, what exactly are you looking for?
Yeah, it could be public or private, really up to probably $10 billion in enterprise value. So real scale businesses, which is ultimately, I think, important. If you're going to bring technology in and you're going to create competitive advantage by doing it inside, you need the resources to invest into the technology and the analytics to make that work. So scale businesses, existing businesses, could be private or public, and we'll see.
What sort of technology do you look for without the pressure of the quarterly earnings that you dealt with at Domino's when you think 5-10 years out about where consumer companies need to be?
Yeah, I mean, that's really the key also in terms of doing this through private equity is having the time frame to do it. I mean, it took some time to build that at Domino's. And so really to me, it could be retail, it could be restaurants, it could be hospitality, it could be healthcare, anything where you've got the direct relationship with the customer, right? And that's the key, because you're creating the data, you know what they're doing, what they're buying, how much they're spending. You can get far more efficient with media spend. And so really, to me, that's the key, is that they've got the direct relationship with the customer. So they're creating that opportunity for using that data and kind of using the analytics that you can to drive efficiency.
In retail, does mall exposure make you nervous?
Honestly, there are great retailers right now that are doing incredibly well. I'm the lead director at Best Buy. They're doing incredibly well. So, it really it comes down to how they're executing. And, Best Buy has been putting on a clinic, right? I mean, they've been doing incredibly well. They're using technology. They sell technology. But I think it's less about, where they are located and how they have adapted to this new world. And there are those that are struggling with it, and there are those who are doing incredibly well.
You mentioned a number of different industries just now in terms of what you might be looking at. What's going to actually be the signal that this is the right one? I mean, clearly things have to be available for sale. Do you also see yourself rolling up in a particular industry, or just doing one large acquisition?
Well, I mean, over time, it will hopefully be more than one acquisition, but the goal is to find the first one that's got the right fit, that we're excited about, kind of that ability to transform. If it's private, it may well be a family that, has been trying to figure out how to do this. They've got a great business they're proud of. They want someone who can come in and really help them drive that forward. But over time, I'll go very deep on the first one, help figure it out, make sure we've got the right team in place, that we've got the right strategy. As it's rolling, then we go on and work on the next one. So it can wind up being 2 or 3 over time.
One question that I always have when people talk about investing in technology at fast food companies and restaurants is the supply chain, and whether the eventual goal is to replace the labor force with technology.
Right.
How do you think about that?
It's interesting. We look obviously at a lot of things at Domino's, and people want their food to be handmade. So I honestly think that replacing the people making the food is probably the least interesting. But clearly, how they're ordering and how you're getting the food to them, and how you're marketing to them, all of those things, I think, are huge opportunities.
Who's doing a good job at that? Because since you
Domino's
left,
is doing an extraordinary job.
Domino's same-store sales growth has slowed down, and they're facing increasing delivery pressure from Yum, and Yum's Pizza Hut, and Papa John's is resurgent. Hasn't quite been the same story.
Domino's team is exceptional. I have no doubt that they are going to continue to grow the business. They are fantastic. But I always have said, if you look at the restaurant industry, Domino's has done a great job kind of with off-premise. Starbucks is probably the best on-premise with what they've done with technology. But Domino's is in a great place.
You'd put Starbucks above, say, Chipotle? In recent years?
Today, yes. In terms of how they're using technology, I think Chipotle is investing, and they're working to get caught up on that. But I think up until now, I'd give Starbucks the edge on that.
Do distressed situations interest you? Because the thinking is you can either invest in tech or you can manage your balance sheet obligations.
Right. Now, I'm probably not a distressed business. We're really looking for good businesses that have got strong cash flow, where there's just this opportunity to transform how they operate, how they go to market, to bring the technology into that. So that's really what we're looking for.
Do you think, we've been talking about this every quarter with McDonald's, for example, how do you get traffic up? I mean, it's one thing to have promotional pricing and new menu offerings, but to get people in the door to comp that up year on year has been challenging.
Yeah, businesses that are executing well get it done. And, but honestly, the restaurant industry is not going to grow fast. I mean, it's probably a 1% to 2% kind of order count grower. And so it is largely going to be a share game. Those people who are executing incredibly well are going to take share, and it's going to be at the expense of those who are not adapting quickly enough and keeping up.
I mean, the stocks are at record highs. Some of these stocks have done so well this year, and I'm wondering if you think that's a reflection of the strong consumer we keep talking about, the fact that the U.S. is not in recession and not heading there because it's on the consumer's back, or just the business models, the asset-light models, the fact that bond yields are low, that sort of thing.
Yeah, I mean, really, it's an example of what we're going to be looking for at Carlyle is businesses that are generating the cash, they have the right model. That's why I think they're attractive, and it's really what we're going to be looking for.
I'm just curious when you saw the chicken sandwich Popeyes story, which involved social media, involved an inability to get what their customers then wanted.
Right.
What were your thoughts?
Yeah, it's interesting. They generated an awful lot of news around the Popeyes brand. And it's a terrific brand. And, I don't know how much of it was on purpose or not to run out, but they generated an awful lot of discussion around it.
Well, I thought you were going to ask about alternative meat.
Right.
Is that here to stay?
Sure it is. Yeah, no. I mean, absolutely. Look, I don't know how big it's going to be, but there are certainly consumers out there that are demanding things, and that's how you get on trend.
Patrick Doyle, good to have you back.
Thank you, Sarah. Appreciate it.
Now joining Carlyle Group.
Oh, it's me.
That's you.
Sorry, I was texting. Important, I promise. When
you
we
get
return.
1 tease per hour. Make it good.
Thank you, Sarah. Sarah's always here for me. But when we come back, all three of us, stocks are continuing to rally. But of course, we ask that age-old question. Is it going to last? We'll give you the playbook on volatility when we come back.
For thousands of years,
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Easing Hong Kong tensions and as well a slew of global trade data helping fuel today's broad rally. You can see right there all the major averages. Joining us now, Wells Fargo Asset Management Senior Portfolio Manager, Margie Patel, and State Street Global Advisors CIO of Active Quantitative Equities, Olivia Engel. Margie, you think now may be a good time to buy and that people are making a mistake if they're underweight equities. Why?
Yes, I think so. Well, I think one of the reasons we had this correction, macro uncertainties, also reflects the fact the Fed was too tight last year, and they have changed that. They're starting to ease. So with a lag, say 6 months from now, I think we'll see economic growth start to pick up. Stocks will follow. So I think now is a good time. We've had a 5 to 8% correction in a lot of sectors. That looks like a pretty good bargain to put money to work in here.
Olivia, you tend to think, however, I believe that there's not that much that's actually cheap in this market. Is that true?
That's correct. I think this is really the time we want to be focusing on defensive quality, but not overpaying for it. There's a lot of things that are cheap in the market, but I think they're cheap for a reason. So we're trying to find, and it's a challenging job to find the names and the segments of the market that are reasonably valued, but providing some cushion against this late cycle, macro-driven, volatile market.
All right, so cheap for a reason is what? Is macro-driven and sort of what sectors of late cycle sectors? Or?
Possibly banks and autos are in that category, given the interest rate cycle, given the trade wars. It's too early to be piling in there. I think where we can find better value in names that are going to be more stable. We think that there are names in the traditionally not so defensive parts of the market, like in the consumer discretionary part, we've got the restaurant sector. You were talking about picking within the restaurant sector in the previous segment, but we actually think when you're looking for characteristics of sustainable growth, as your previous guest was saying, the restaurant sector really shines in that category. Also in the tech services segment, it's not so exciting as the high-flying, really expensive tech categories, but it's a much more defensive play, and you can find reasonable value there.
Margie, I'm curious what you're seeing within Wells Fargo itself, since I would assume you have a view on that, in terms of people staying out of equities or being perhaps reluctant to make the allocation that their advisor might advise.
Well, we see investment advisors very positive about the market, and actually their clients are too. A lot of the advisors walk their clients back from the ledge, bounce back. A lot of advisors got a lot of credibility. People miss that. So people are much more optimistic, I think, than they were in previous slowdowns that we've seen.
Olivia, how do you think about the strength of the U.S. consumer and how much staying power that has to keep us from turning lower in the economy?
I think it would be dangerous to be betting everything on the U.S. consumer being super robust. So I actually think it's better to have offsetting positions that are going to be resilient in the effect that there is a recession. I'm not saying that we're in an imminent recession, but the market is going to react as though there is one going to happen from time to time, and so we just don't want to have that volatility in equity portfolios. That's why we're looking for the sustainable growth at reasonable valuations.
Margie, that's certainly, the viewpoint of a lot of people who say, let's just avoid the volatility in equities and try to find some value in either corporate debt or fixed income. I wonder, to what degree are you trying to play around stocks in particular?
Well, we're not too worried about short-term volatility. As investors, we're really looking for long-term wealth creation stocks that have sustainable growth. And within fixed income, we do think that the high-yield market in the U.S. looks very attractive for the fixed income investor. Yields of, say, 4 to 6.5%, a huge premium over treasuries, and defaults running under 2%. We think that will have modest returns, less than stock, but for the fixed income oriented investor, we think that's a pretty attractive place to be right now.
So again, I guess, Margie, to end here, you see the risk being overstated in terms of the equity market, broadly speaking.
Yes, I do. I think it's a little bit of wishful thinking to hope we have a recession so we can pile in and buy stocks down 20%. This looks pretty much like the kind of corrections we've had over the last few years, 5 to 8%. The economy is too strong and too sustainable to have a recession and a big stock market crash, we think.
Well, thank you both, Margie and Olivia.
As we go to break this morning, take a look at Box, surging after Starboard discloses that 7.5% stake in the company, calling shares undervalued. Dow's up 158 in a pretty tight range today so far. Squawk on the Streets back in a moment.
I can find and fund my car, from a Mini to a Jaguar.
Feel-good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel-good car buying, all in one place.
Shouldn't be a carry-on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. See what's under there. To chain the back wheel would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Stocks kicking off a typically ugly month, but one strategist says the market could be about to rewrite history. Find out more on tradingnation.cnbc.com. More Squawk in the Street is coming up.
You know that tech stock we talked about?
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Panero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
At the Bank of Antandek, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
We are following overseas stocks higher. Time now for our ETF Spotlight. Financials recovering this morning after falling nearly 2% yesterday on global growth fears, weak manufacturing data, and falling bond yields. Goldman Sachs and Citigroup among the large banks up more than 1% today. Regional banks, ticker KRE, also turning positive, rebounding from yesterday's losses. They are now higher, at least if you look at that ETF, by 1%. Yields going up certainly helps that trade.
All right, let's send it over now to John Forth so we can get a look at what is coming up on Squawk Alley. John.
Hi, David. Well, with state attorneys general turning up the heat on Google, it's worth raising the question, have Google and maybe Facebook not only lost the East Coast, D.C., but have they lost Silicon Valley in terms of morale, in terms of sentiment? We'll get into that coming up on Squawk Alley.
ETF Spotlight is sponsored by Invesco QQQ.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every will help. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Strings and things. Strings and things. Strings and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called Strings and Things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
Welcome back to Squawk on the Street. I'm Dominic Chu. Stocks are rallying on the back of a string of bullish geopolitical headlines. The S&P 500 has nearly wiped out yesterday's losses. We still got a little ways to go there. But cyclical sectors like tech and industrials are bucking that trend, that recent downtrend that they've seen, along with energy stocks as well. Now, that's in large part due to a big rally in crude oil prices, which are now trading in the green over the course the past month as well. That's lifting energy names like Devon Energy, Hess, Apache, ConocoPhillips, you name them. They're all up about 2% or more today. We'll see if that trade holds up throughout the course of the day. Geopolitics and supplies and demand concerns all playing out. Now I will send it back downtown to you guys, David, at the New York Stock Exchange.
Thank you, Dom. Now time to turn to Sarah, so we can find out what's coming up on the big show at 3 o'clock today.
So, of course, we'll see whether we can sustain this rally. It's lost a bit of steam. We've got some of the defensive groups under pressure now, like utilities and healthcare. We've got a big show coming up. We're going to speak with former Fed Governor Sarah Bloom Raskin about all of today's Fed speakers, plus former New York Fed President Bill Dudley's new Buzzy op-ed clarifying his comments about politicizing the central bank, really not walking much of it back. After the bell, Slack will be reporting quarterly results for the first time as a public company. That stock now down double digits since its June IPO, getting a nice pop, though, today. So we'll see you guys then, 3 p.m. Eastern.
All right. When we come back this morning, a lot more on today's rally as the Dow's up 158. Squawk Alley starts in 3 minutes.
I can find and fund my car. From a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying, all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores, book may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Good morning. It is 8 a.m. at YouTube headquarters in San Bruno, California. 7 a.m. on Wall Street, and Squawk Alley is live. Good Wednesday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with Morgan Brennan, John Ford at Post 9 of the New York Stock Exchange. Watching the markets here, Dow's up 179, but Google is going to start us off. The FTC announcing this $170 million settlement with YouTube earlier this morning. About to hold a press conference on that in just a moment. We're going to take you there live for the start of it as we continue to watch Alphabet shares essentially unchanged today, John.
Yeah, and our Elon Moy is there in Washington, joins us now with more on this settlement. Elon, 170 million, now in the context of Facebook, maybe doesn't sound like a lot, but that's a lot for the FTC, right?
Yeah, the FTC is very quick to point out that this is the largest penalty ever collected under this privacy law that protects children when they are surfing the web and when they're online. This settlement was actually split between the FTC and the New York State Attorney General's office. $136 million will be going to the FTC, about $34 million going to the New York AG. And during the press conference, I would be on the lookout for some very tough rhetoric from regulators. We've heard from New York's AG saying that she felt that YouTube put children at risk and abused their power. We already had a statement from the FTC chairman saying that there's no excuse for the violations that YouTube is alleged to have committed. So I think that you're hearing a very strong tone out of regulators here in Washington. But of course, the critics are going to say, where's the bite? Where's the actual teeth in this settlement? Will YouTube actually have to change its business practices in a meaningful way?
And to implement strong conduct relief and settlement of an action brought by the FTC and the New York State Attorney General's office for alleged violations of the Children's Online Privacy Protection Act, commonly known as COPPA. Let me start by explaining why we allege that Google and YouTube violated our rule implementing COPPA. COPPA requires that certain websites and apps get parents' consent before collecting personal information from children. The definition of personal information includes cookies used in behavioral advertising. The COPPA rule applies differently to third parties serving behavioral ads versus creators of child-directed content. The content creators are strictly liable for COPPA compliance. Third parties are subject to COPPA's requirements only where they have actual knowledge that the website or service they're serving the ads to is child-directed. To put it in context for today's case, YouTube as a general audience platform is not directly strictly liable under COPPA for the content of the videos uploaded by others to its platform unless it has actual knowledge that the content is child-directed. Our complaint alleges numerous instances in which YouTube and Google had actual knowledge of the child-directed nature of channels and videos on the YouTube platform. This is the basis for the FTC to find that Google and YouTube violated COPPA. Our order accomplishes three important purposes. First, it imposes a substantial monetary judgment of $170 million, with $136 million going to the Federal Trade Commission as a civil penalty and $34 million going to the state of New York. The $170 million judgment is 30 times larger than the largest COPPA civil penalty the FTC has ever previously obtained. It is 3 times larger than any privacy penalty assessed against Google anywhere else in the world. And it is 10 times larger than the civil penalties we have obtained in all of our 31 prior COPPA cases combined. A penalty of this magnitude sends a strong signal about the importance of children's privacy. Second, the order requires the companies to refrain from using or benefiting from the data that they previously collected from child-directed videos or channels. Third, the order imposes additional obligations on Google and YouTube that go beyond the requirements of COPPA. The order requires YouTube and Google to notify channel owners about their potential COPPA obligations. It also requires YouTube to develop a system or a mechanism through which channel owners must identify their child-directed content on the YouTube platform so that such content can be treated in a COPPA-compliant manner. This is particularly significant because COPPA does not require platforms such as YouTube to determine whether the videos posted by others are directed to kids or not. Going forward, YouTube and Google will automatically have knowledge of and COPPA liability for all child-directed content designated through this mechanism. In this way, the order prevents YouTube and Google from turning a blind eye to the existence of kids' content on the YouTube platform. Finally, YouTube must provide annual training about compliance with COPPA for employees that deal with the channel owners. None of this is required by law. No other company in America is subject to these types of requirements, and they will impose significant costs on YouTube. This case sends strong messages to third parties like YouTube, channel owners, and the business community as a whole. For YouTube and other third parties like it that serve ads, they can't market their ability to get child viewers on the one hand and disavow knowledge that children are using their service on the other. They can't rate videos as kid-directed for one purpose and then say they have no COPPA liability when they collect information from kids watching those videos. For those who create child-directed content to upload on YouTube, the message from today's case is that the FTC considers these videos and channels to be websites or online services directed to children under the rule and thus strictly liable for compliance with COPPA. Once our order has been effected for a period of time, the Commission will conduct a sweep of the YouTube platform to determine whether child-directed content is being properly designated as such in order to ensure that the channels themselves are complying with COPPA.
And
finally,
that is FTC Chair Joseph Simons detailing the action, the settlement that requires Alphabet's YouTube to pay this $170 million settlement. Let's bring back in our Elon Moy. Elon, it strikes me that the chair is talking about how this only requires YouTube to follow these rules. It raises the question, what about Instagram? What about TikTok? What about so many of these platforms that are popular with kids? Regulation isn't legislation. Where does this leave the rules?
Yeah, so I think that the hope of the FTC, at least, is that this settlement could serve as a deterrent and perhaps a model for other companies in this space. You heard him talk about ensuring that YouTube does remain accountable for the provisions of this children's privacy law. He said that he doesn't want YouTube to turn a blind eye to the content that is on its site. And it set up the system that requires the content creators, the users of the site, to sort of self-designate and to identify the content that is directed at kids. I think that's important for two reasons. One, because there's been criticism already so far about the size of this fine. Simon said that cost to the business of setting up that system, that should be considered as a significant cost of doing business and added to that dollar amount of the civil penalty of $170 million. And in addition, it ensures that YouTube and perhaps others will not be able to escape the very clear provisions and protections of this privacy law. However, there's a lot of debate amongst the commissioners about whether this provision actually creates a sort of backdoor system within YouTube, that if YouTube can just point to the content creators and say, hey, it was their job to determine whether or not this content was directed at kids, their job to follow the rules, not ours, perhaps YouTube could escape some culpability there. But here you hear Simon's very adamantly arguing that they want to ensure that YouTube is aware and is designating and does not turn a blind eye to what's being posted on its site.
Yeah, Elon, definitely right out of the gate, Simon's there stressing the size of this COPPA fine compared to all the other ones before it, 10 times larger than all of those COPPA cases combined. Just to put that number in perspective, thanks for joining us and breaking down this conference as it continues. Julia Borsten has more from Los Angeles on this as well. And Julia, YouTube itself has been coming out and outlining some of the changes it's going to make due to this situation with the FTC as well.
That's right. Susan Wojcicki, she's the CEO of YouTube. She posted a blog post talking about how they're going to be working with lawmakers and they are going to be taking additional steps to comply with COPPA and to make sure that they're doing what they can to protect children, making big changes about the way they collect data from kids using their service, the way they target ads, also saying that in addition to asking content creators to self-identify, they're also going to be using machine learning, using technology to try to identify any content targeting kids. So making a lot of changes there, but one thing that they're really trying to do is move kids away from their regular YouTube platform and onto YouTube Kids, which is a separate place with content just for kids, where it'll be much easier to make sure they're complying with the rules. We spoke to some analysts, Jeffries Brenthal. He told us that he actually does not think this is going to have any impact on the financial performance of the company because the fine is so small in comparison with Alphabet, Google, and YouTube's revenue. The company is so large that it just will be a drop in the bucket for them. But the real question is whether this could dissuade content creators from wanting to create content for kids because they're simply not going to be able to make as much money from advertising. So one way YouTube is going to try to counter this is they're creating a $100 million fund to create original content for kids. But we'll see whether if you're a mom creating content with your kids and have been making a pretty penny from YouTube on this, you're not going to be seeing as much revenue from YouTube. So we'll see how that shifts things.
Certainly, the fine itself, as you said, Julia, 1/100th of 1% of their 2020 revenues. Julia Borsten, Elon Mui, thanks, guys, for that. We'll continue to watch that presser. We'll turn to the rally. In the meantime, stocks in the green, led by the tech sector. Chips on pace for their best day since about the middle of August. Our next guest advising to stay long in tech. Joining us this morning, Wedbush Securities Head of Tech, Joel Kalina, and UBS Global Equity Strategist, Keith Parker. Guys, good to see you both.
Yeah, good to be here.
Yeah, what's your general take, given some relief that we're feeling today?
Yeah, I mean, obviously some positive headlines overnight for the global market, seeing a rotation back into risk assets. But I mean, August was an exhausting month. I think we saw 60% of the days in the month had 1% plus moves. And that just shows guys were kind of in a defensive mode, really from the first or second week of August. That's carrying over in the early parts of September as well. And I think the main strategy, at least amongst the tech and dedicated investors I speak to, is to avoid the blowups. We see the big unwind out of the cloud SaaS complex. Valuations got extremely stretched to the upside. And I think the pain that was witnessed last year in Q4 of 2018, that's fresh on a lot of guys' mind. So really, year-to-date performance protection has kind of been at the forefront of a majority of conversations. And guys are looking for more value pockets within the sector, whether it's in the memory complex, on the payment side like FIS or even Comcast Comcast on the cable side. Activision within the video game space has caught a bit of late. So stock picking is definitely at the forefront, but guys are scared of the more kind of crowded trades.
Keith, what's your take on this? I mean, one of the things we've been hearing is that if you're searching for growth, especially as interest rates continue to move lower here, that tech continues to look attractive. Would you be taking a more broad-based approach here, or would you be doing more individual stock picking?
Yeah, I think at this phase of the market where PMIs we saw yesterday, U.S. ISM manufacturing falling below 50, we start to see some cracks typically in leadership, and I think we saw some signs of that last year in the fourth quarter where some of the high flyer tech names had sold off pretty hard. And I think you're much more in the phase of being selective within the tech sector. And to the point about value, though, and thinking in terms of aggregates, tech dividend yield plus buyback yield is really only second to financials. So you have that high yield plus growth. So there is definitely pockets of value plus growth where you can potentially ride out some of the market volatility amidst a backdrop of slowing growth and another round of tariffs coming on board in September.
Joel, talk to me about how the macro picture impacts tech. I mean, we see this Brexit drama, the plot thickening every day. Is the risk increasing, or is it decreasing in a way because now, a no-deal Brexit perhaps more unlikely? And then when you see what's happening in Hong Kong, is it good that now they've pulled that extradition bill entirely? Or, the fact that the protesters now say, well, no, we wanted more than that. Yeah. Does that mean increased risk for tech overall?
I mean, to some degree. So the pulling of the extradition bill, definitely one more overhang removed. And guys don't have to wake up and have discussions on what the next policy move out of that region is going to be. And like I said, now Brexit's kind of approaching. We'll see what kind of happens there. But again, the gorilla in the room remains the state of China-U.S. trade. And obviously now we've been pushed out to mid-December on another round of tariffs that should be implemented. But at the end of the day, it just seems like China and U.S. are going to be in a kind of this tug of war for the foreseeable future. And Mike, knowing Trump and how his track record, you'll probably see some sort of big, humongous deal prior to the election. But again, sectors like the semiconductors, high conviction buying is just going to be non-existent because again, you can, when there's policy by tweet, you're just at risk on any given day of getting blown up or caught off sides on a trade. Hence, you're going to see guys be a little bit more nimble, probably priced a little bit more, size smaller than historically until this kind of overhang's removed.
Keith, is the U.S. still most attractive place to be making investments right now, given the macro backdrop here, or are there other opportunities to be had looking globally?
I think U.S. remains a core holding in a portfolio, given the fact that its total yield of buybacks plus dividends is highest, if not the highest, across the world, and growth remains above many parts of the world, and the defensive characteristics, whether it's staples, healthcare, and defensive growth, remains the highest across regions. And when we see global PMIs dip below 50, U.S. tends to outperform significantly. So until we start seeing credible signs of that turning point in markets, U.S. remains a core holding, but we do see pockets of value starting to open up. We've seen some risk repriced. You mentioned Brexit, also Italy, Italian politics, Europe amongst top performing regional indices over the past 1 month. And I think part of that narrative is some reduction in very elevated uncertainty.
Certainly, September is going to give us a lot to juggle from central banks to a lot more. Guys, thanks. Good to see you.
No, good to be here. Thank
Joel
you.
And Keith.
Thank you.
Hurricane Dorian continues its slow trek up the southeastern coast of the United States, and Contessa Brewer is back at HQ with the latest. Contessa.
Morgan, well, in the daylight after the storm, the video coming in from the Bahamas is really stunning. The Prime Minister says some areas have been decimated. The Red Cross estimates nearly half of the homes on Grand Bahama and Abaco Island are gone. The official death toll stands at 7, but listen, so many people are unaccounted for at this point, and we're learning even shelters were destroyed during the storm. Unbelievable video. Infrastructure, which is critical to recovery, is crippled. Bridges are gone. The Grand Bahama International Airport in Freeport is underwater. The Western Air Terminal there, serving regional flights and private planes, crumpled. The port in Freeport is a critical hub. Buckeye Partners has a 26 million barrel petroleum storage terminal there, and the company says its first task is to account for its employees and their families. It has pledged to bring in needed supplies to the island as soon as it's safe. Right now, Dorian's path is still sliding up the coast just offshore. Orlando's theme parks have reopened. The airport there is still closed for a few more hours. It looks like Orlando's airport is planning to reopen in about 45 minutes. Seaports in Jacksonville, Savannah, Charleston are closed. Charleston's airport plans to close at 3 today. JetBlue mentioned in a filing it expects to see a slight negative impact on its third quarter revenues because of Dorian's impact. Hurricane warnings are now in place for Charleston, Myrtle Beach, Wilmington, with an expectation of extreme coastal flooding and storm surge through the end of the week. And I just want to remind you, next week marks the anniversary of Florence, which of course inundated Wilmington and the surrounding regions with water, caused a lot of damage there. They're just getting back up onto their feet, but now this one is making a beeline toward Wilmington. John?
Yes, indeed. That is rough. Thank you, Contessa. And we are getting a market flash as well. Dom Chu has that at HQ. Dom.
All right, it has to do with oil, John. Crude has been climbing steadily throughout the course of the session, both for WTI and Brent. And here's some news that could affect it further. The Treasury Department has designated a large Iranian petroleum shipping network as one that supports and finances terrorism. This is through the Islamic Revolutionary Guard Corps and through Hezbollah, the militant group in Lebanon. It says that Iranian officials are increasingly seeking to deceive customers into buying Iranian oil, and it's warning the maritime community against dealing with sanctioned individuals and groups. So a new issue from the Treasury Department coming out. It could have an effect on oil prices, John. We'll find out later on today as this develops. Back over to you.
All right. Thanks, Dom Chu. And when we return, more than 30 U.S. state attorneys general preparing an antitrust investigation into Google. We will ask Dan Rosenzweig his thoughts on that and the YouTube settlement next. Stay with us.
Johnson & Johnson.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Nason and P Money, MCing from Harry Pinero and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
The tech lash out of Washington is ramping up. More than 30 U.S. state attorneys general putting an antitrust case together against Google. This follows the YouTube FTC settlement we just saw moments ago. And you have Senator Wyden of Oregon suggesting that executives in Mark Zuckerberg's position in another era might have faced jail time. Joining us to discuss it all, Chegg CEO and former Yahoo Chief Operating Officer Dan Rosenzweig joining us now here at Post 9. Dan, boy, that Yahoo thing was a long time ago. How are you? But, good. Speak up. Good. So let's talk about the outlook on Google in Silicon Valley right now. It seems to me, I was just looking at this tweet from the Basecamp CEO talking about how Google is ranking its ads higher than Basecamp. There's discontent, it seems. Is this kind of like the Microsoft situation from 15, 20 years ago, but now directed at Silicon Valley companies?
It may very well be. Look, these companies have huge power and huge influence. Microsoft did in the day. People forget they control the operating system. Apple had 3% market share. So if Microsoft wanted to stop a competitor, they could do it. Today, people are concerned because everybody's going direct. Everybody wants to go direct to the consumer. So there's only a few pathways to do that, right? We know it's Amazon, we know it's Google, we know it's Apple, and we know it's Facebook. So yeah, you're getting a lot of smaller companies who are feeling like they're being disadvantaged by price hikes or on the mobile device, the way Google displays search ads. I mean, there's 4 paid ads above your own brand name. So I think you're beginning to see companies who are desperate for access to consumers at an affordable price pushing back for the first time, and because of social media, they can push back very visibly. So that really hasn't happened before.
So can they hunker down and kind of wait this out? Google, Facebook, etc., or can they restructure, maneuver their way out of this type of scrutiny and kind of ongoing fines?
Well, those aren't mutually exclusive. They probably could wait it out because the attention span of Washington is not very high. It's a tweet away from talking about something else. On the other hand, they should pay attention to it because it actually does matter. You want these things to be fair, right? You want open access. The whole point of the internet was open access. That's why we all fought for low prices of broadband. That's why we all fought for putting it in rural homes. It's why we wanted to bring the price of phone plans down. So it actually does matter. It matters to our economy. It matters to businesses. It matters to individuals. And so I do think that they should follow the regulations. And I do think the regulations probably need to be updated. And if they were being truthful, they would probably acknowledge it. They have too much stuff is in secret, so you don't know. The algorithms change all the time. And that's unfortunate.
I'm curious why you think the floodgates seem to be opening now. Obviously, you got this FTC COPA settlement this morning with Google. Then you also have the news, the reports yesterday that more than half of the state attorneys general in the U.S. are investigating Google.
And Europe.
You've got Europe. You've got federal, scrutiny here across a number of different platforms. But why the timing of it? I mean, some of these complaints have been out there for a while. Why do you think it's all happening now?
Well, I think you guys talk about it regularly, the tech lash. There's a lot of wealth being created. There's a lot of people with a lot of power. There's a lot of people that people feel are taking advantage of them. So I honestly believe it goes back to the election, and it goes back to the belief that tech was used to advantage one side over the other in the election. And I think, when people get their credit cards and their IDs taken, and when you find out there's all these fees, or when you're subscribing to things that never end, I think there's been so much being levied against the consumer themselves. I think they're exhausted from it. But I really do think it goes back to the election where people felt that they were used against their wishes and then not told the full truth.
But if anger is so acute, then why is this fine such a pittance relative to their revenue?
And now you're asking me about why government makes decisions they make. I couldn't even begin to dream. YouTube probably does that in an hour of advertising. So, to me, these are all ways for people to tax companies other than using the tax system. Europe doesn't have any significant growth companies in the internet or the tech space, so what do? They tax the U.S. companies. There's good things, fair things, right things to do, and then there's things that I think just are done for headlines and money, and, it's up for investors to discern the difference between the two, but I don't even think, the CEO gets more than that a year.
Well, let's talk a little Chegg. Some news out of your company announcing an acquisition of the Peter Thiel-backed Thinkful, an online skills training company. And we've seen a lot of this. You know, Thinkful does a lot of coding training, touts median salary of, I think, around $65,000 a year for people who go through their training. Yes. This is a big shift for you, though, because normally you've done support for students who are in school somewhere else. Thinkful is doing their own training, right?
Yeah, it's a great point. We look at it as a logical TAM expansion, which is we've got 1 in every 2 college students is registered with us. You know, if you believe analysts, we'll have nearly 6 million paying customers this year. We're growing at 30% a year. We are the largest direct-to-consumer company, and what we've done is we've lowered the cost of education, improved the quality of it, made it more accessible, and supported students from diverse backgrounds all over the place by helping them learn the material they need to learn in the academic world. But academics is not enough. We have a global economy. We have a tech-based economy. We were just talking about what technology can do, good and bad. And so we want to create really high-quality, high-integrity, low-cost, direct-to-student online learning around career skills and job skills. Logically, every student in school that's interested in getting higher paid jobs is going to want something to this. We have the largest reach to them, so cost of customer acquisition will be low. But we've also built online chat-based tutoring, and we built the largest database of expert Q&A, which we can plug into the back of this. So what we're going to be able to do is lower the price of it, make it more accessible, make it better, bulk up the quality, bulk up the content. And so we think that this is going to be one of the fastest growing assets that we've ever bought. And I think in a few years, this may be our second largest asset, because if you think about 80% of college kids go to college for one purpose, to get a better job. The institutions are not training them to do so. They're training them in academics. It's all valuable, but this is the part that they need to learn in order to be employable, to get high-priced jobs. And if we can make it low price...
How much?
Well, right now it's about $6,000. We think we can even bring it down lower.
Okay.
This company also offers ISAs, income sharing agreements. Our view is to be able to offer them interest-free, so that the students ultimately take very little risk if they want to take it at all.
So you start paying us, you'll say,
if you get a job. After you get a job.
Right.
And then with no interest on that. Okay. So our goal is to make it more accessible, more democratized, open it up to diversity, to groups that would never get access to this. It's the benefit of going direct and online. It's much less expensive. It can be much more comprehensive. It can respond to the consumer's needs much faster than anybody else. And this has been a business, by the way, that has been growing faster than Chegg. Right. So for us, we think this is an incredible acquisition, and one that's going to expand our value to both students that we have, add new students, and clearly to investors, and we wouldn't have done it.
Dan Rosenzweig, CEO of Chegg.
Thanks for having me.
Thank you.
Stock surging after yesterday's sell-off. The Dow's up 207 points right now. Here are the names that are leading that average's gains so far in today's session. Intel, United Tech, and Walgreens. We're back after a quick break.
This meeting of the Losers Club has officially begun.
In 2 days,
I dreamt of you.
it all ends.
I craved you.
In London.
I missed you.
Don't miss the final chapter.
We didn't stop it. We can't let it happen again.
Don't miss the end of It.
Hello?
It, Chapter 2. In cinemas Friday. Book tickets from your desktop. Rated 15.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to Tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at Tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. We need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
European markets closing overseas, getting a boost in today's action. Every sector was in the green as UK lawmakers inched closer to blocking this no-deal Brexit scenario. Autos lead the gains. Daimler, BMW, Volkswagen all up more than 1%. But top of mind for investors, obviously, it's Brexit. The UK Parliament moving to seize control of the process as the situation there continues to spiral. Willem Marks has the latest from London. Willem?
Carl, thanks so much. So last night we saw Boris Johnson expel more than 20 members of his own Conservative Party because they refused to vote alongside his government. That was to take control of the parliamentary schedule today. And because opposition lawmakers, together with those Conservative rebels, have now taken control of the parliamentary schedule, that means that in a few hours' time they'll be voting on a fresh piece of legislation designed to block that possibility of a no-deal Brexit at the end of October. Boris Johnson has insisted he wants to hold on to that scenario as a negotiating threat as he meets with his European counterparts next month. He says that without that threat, he won't be able to force a better concession from the Europeans, something that would potentially pass through Parliament after Theresa May's attempts, remember this time, 3 times failed to get through the lower chamber here in the UK. In terms of the opposition lawmakers, they've said that they'd be prepared to go for an election, something that Boris Johnson is now demanding to try and resolve the situation, but they're only prepared to do that, they say, once he has allowed them to pass through this legislation, blocking off that possibility of a no deal at the end of next month, guys. As you can imagine, we've seen some action on the currency markets as a consequence of this over the last 48 hours or so, but the uncertainty of a no-deal Brexit might be at least postponed by several months later on this evening.
Yes, an election to resolve the situation. Where have we heard that before? Willem Marks in London. Thank you. Now let's get to Sue Herrera for a news update. Sue.
Good morning, John. Good morning, everyone. Here's what's happening at this hour. Hong Kong's chief executive Carrie Lam announcing the government will formally withdraw an extradition bill that has sparked months of protests. But in a pre-recorded television message, Lam said the government will not accept other demands from the protesters. Iran ratcheting up the pressure ahead of a weekend nuclear deadline for European nations to come up with a solution for Iran to sell its oil abroad. President Rouhani warning Tehran would take additional steps to accelerate its nuclear activities if there is no solution. Here at home, Supreme Court Justice Ruth Bader Ginsburg says she is feeling good following 3 weeks of radiation treatment for a malignant tumor on her pancreas. She spoke to a packed house on Tuesday at an Arkansas event hosted by the Clinton Foundation.
I think my work is what saved me, because instead of dwelling on my physical discomforts, if I have an opinion to write or I have a brief to read, I know I've just got to get it done.
You are up to date. That's the news update this hour. Back downtown to you guys on Squawk Alley. Carl, back to you.
All right, Sue, thank you very much. When we come back, prospective Fed nominee Judy Shelton's going to sit down with Santelli in a few moments. In the meantime, nice little run here close to session highs. Dow's up 212 and we're above 2930. Back in a minute.
Have you heard about investing in gold?
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Oh, I found one of our new Vauxhall Griffin editions.
Yes. What comes as standard?
Standard? Well, alloy wheels, sat-nav, aircon, DAB radio, Bluetooth, smartphone projection and USB connection.
Wow. Is that everything?
Sorry, forgot the colour touchscreen.
Buy a new Griffin edition, Adam, Astra, Corsa or Mocha X Plus and get a whole host of features as standard. The Griffin edition range. All Griffin, no bull. Visit your nearest retailer now. Vauxhall, British brand since 1903. Participating retailers only. Limited units while stocks last.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Welcome back to Squawk Alley. Let's get over to the CME now and Rick Santelli for a special Santelli exchange. Rick.
Thank you, Morgan. I'd like to welcome, yes, a very special guest, prospective Fed Board nominee, Dr. Judy Shelton. Judy, let's get right into it. Last time you were on, you said something that really resounded, got lots of emails. It would be nice to be virtuous in a vacuum, but I don't think we have that luxury. And I really love that quote, but it also has a dark side. Is it a starting gun for a new round, a bigger round of market manipulation by central banks?
Well, in a way, I guess we're in a position of having to fight fire with fire, Rick, because it's been a comfortable position for Fed officials to just say we're pursuing our domestic economic objectives. But you can't put on blinders with regard to what other major central banks around the world are doing. And it's one thing to say our statutory mandate says we should achieve full employment and stable prices. It turns out there's a third pillar that comes out of the Federal Reserve Act of 1977. And it's that the Fed should be acting to promote moderate long-term interest rates. And I think that goes to the heart of the inverted yield curve that we're now confronting.
You know, the dynamic of what's going on in interest rates, especially longer maturities, is that we have $17 trillion of negative securities. And just this year alone, we've gone from only 20 billion negative corporates to over $1 trillion. So you think the answer is to create more of that? Because that's exactly what will happen if we take that course of action.
Well, I think that is such a prominent symptom of what happens when you decide not to go with market signals and the price mechanism, but to empower a small group of officials to establish the interest rate. Because this perverse situation of negative yielding debt has been engineered by central banks. And I think one could argue that it's not stimulus per se. I don't think it stimulates economic activity, at least productive activity. I don't even think that it raises the inflation rate, which is what central banks purportedly are trying to do. it really has its strongest impact on shifting currencies. So that's what's happening with these differential interest rate policies among central banks.
Now, if the U.S. Central Bank holds the line and doesn't get involved in this Al Capone sort of situation where they're providing something that really isn't on the up and up because it's deemed necessary or economies need it, like alcohol during Prohibition. If we hold the line, can't we do better in the big picture? Because the countries doing what you've just described, they're not doing better. Their economies are deteriorating. Doesn't that side of the ledger also deem some introspection?
It's tempting to think so, but we do live in an interdependent world, especially with regard to currencies, financial flows, investment activity. And the problem is, if the U.S. maintains its virtue and says we're not going that way, first you're going to make it harder for U.S. exporters because the dollar's already at a very high level relative to other currencies, the currencies of our trade rivals and competitors. Secondly, I think you're going to exacerbate that inverted yield curve issue, and it's just bizarre to have short-term rates higher than long-term rates. And finally, there's the global financial stability aspect of it. If dollar-denominated debt becomes too expensive to service because the dollar rate against these other currencies is too far out of sync, then I think you're into real problems in terms of financial stability.
Well, isn't there another road? You know, this president likes tariffs, and in certain situations, tariffs do get borne, in my opinion, by John Q. Public. But if countries are cheating by manipulating their currency, wouldn't that be a perfect situation to apply a level of tariffs? If the Germans, for example, want the euro weaker to help their auto exports, can't we come up with an equation that should you manipulate your currency, that would be the United States' recourse? Can't we take the high road here?
I think we are taking the moral high road by identifying currency manipulation as an unfair trade practice. It really undermines the principles of free trade. And it's a natural response to say, if you're going to effectively apply a tariff against American goods through currency manipulation, making them more expensive in your own country, then our only recourse is to say, then we're going to have to do something as well. Unless we call them on it, we can't begin to seek these broader remedies that I think would start to bring about a level international monetary playing field, and that's fundamental to authentically free trade.
But you know what's really fundamental? That people trade markets and invest in markets for their retirement because there's a price discovery and a real value there. What you're describing, if you take it a couple of degrees farther, are markets where, why should we get up and trade the Dow Jones Industrial Average? Why should we purchase securities that have yields when all of it is manufactured? Why don't we just create government utilities to dole out certain percentages after you give them your money? Doesn't this make the whole system ridiculous?
I think it does go against the virtue of saving. I think it violates what I would call the American spirit of believing in a better future and greater prosperity. If you just believe in opportunity and if you see financial capital as a seed corn that facilitates entrepreneurial endeavor that brings about a higher standard of living for everyone, it goes against all of that to have negative rates. And I think the managed approach to providing decent returns on investment has proven to be somewhat of a failure. So I think we do have to look more toward money providing that clarity on price signals and believing in free markets as the best way for people to make judgments about risk and return and what they would reasonably invest in. And that will be the beginning of getting back on the road to productive economic activity.
Judy Shelton, thank you for your time. And should you pass all the requirements to be a Fed board nominee and go to a governor, you're going to certainly have your work cut out for you. Thank you for joining me today. Morgan,
Pleasure.
Back to you.
Good discussion, Rick. Thanks for bringing it to us. When we return, high risk, high reward. A behind-the-scenes look at the big business of pot and CNBC's documentary, Cannabis Inc., premiering tonight at 6 p.m. Eastern. We're back after a quick break. Dow's up 206.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
From the moment I saw you, the last of the litter, I knew you were the one, and would soon hear the pitter-patter of tiny paws on our kitchen floor and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
I'm Scott Wagner. Here's a look at what's coming up on the halftime report at the top of the hour. We're going to kick around how to navigate what feels like a directionless market as Wall Street remains split on what investors should expect from stocks. Plus, another bump for Roku's price target. Is that stock now too rich or too good to pass up? And sports broadcasting legend Al Michaels joins us ahead of a new NFL season. We'll talk some ball, some stocks. We'll do it at noon. Carl, we're about 10 away. Look forward to seeing you then.
Al knows the market. We know that, Scott. Can't wait to see in a bit. Scott Wapner. Meantime, our Melissa Lee is investigating the booming cannabis industry. It's a market that's expected to hit $83 billion in the U.S. by 2025, thanks in part to marijuana's new reputation as an all-natural cure for illness, boredom, and just about anything in between. Her special high-risk, high-reward Cannabis Inc. premieres tonight at 6 p.m. Eastern, 3 p.m. Pacific on CNBC, and she joins us with a preview now. What's left to be said about this space, Melissa?
There are a lot of unknowns so far, Carl. Investors make a lot of assumptions, but there are a lot of questions still, particularly surrounding the promise of medical marijuana. It is perhaps one of the most intoxicating factors attracting consumers and investors into the cannabis space. But some medical experts say it is not the all-natural miracle drug that so many are betting on.
I was diagnosed with my cancer in July of 2013. I was just gutted. I mean, we're talking staying up at night to write birthday cards to my daughter for every year I wouldn't be alive. Talking to my wife about who she should marry when I'm gone. Forever.
So what'd you do? What was the decision?
The decision was to go with the cannabis.
As an investigative journalist, Ethan Stewart is a natural skeptic.
To be totally honest, I didn't think it could help me.
Really?
Oh, yeah.
But when faced with few options to treat his cancer, he made a bold decision.
And so, yeah, I dove off the deep end and went into, doing full extract cannabis oil. And that's when I got scan results that were pretty wild. I had no evidence of disease in my body.
No evidence of disease
in my body.
Incredible as it is, stories like Ethan's aren't unique. Cannabis, a drug vilified for so long,
the most dangerous drug that is in use in our country today,
is now being touted as a serious medical breakthrough.
the notion of being able to treat a vet with PTSD, with cannabis, as opposed to like a host of pharmaceutical cocktails, is really exciting.
My uncle has Parkinson's disease. He tried CBD. In the first 2 hours, he called me and says, "This is the greatest thing that's ever happened to me."
I mean, that's the beautiful thing about that drug that we're talking about. There are a number of issues where even now the FDA says cannabis works. Cannabis is medicine.
Except for one thing.
Well, it's not medicine. This is a very dangerous national experiment that we're conducting right now.
Former FDA Commissioner Dr. Scott Gottlieb.
There's no evidence to support any of the medicinal claims being made in these state dispensaries that would rise to the satisfaction of the Food and Drug Administration.
Because cannabis is a Schedule I drug in the U.S., alongside heroin and LSD, it's nearly impossible to run clinical trials. In fact, there's only one FDA-approved cannabis-based drug, Epidiolex, which treats a rare and specific type of seizure disorder. Beyond that, nothing. Which raises the question, is cannabis the miracle drug that consumers and investors are banking on? Or simply the product of misleading marketing by the industry itself?
That is just one of the fascinating debates between cannabis bulls and bears that you will hear during our new CNBC original documentary, High Risk, High Reward, Cannabis Inc. It premieres tonight, 6 p.m. Eastern Time, 3 p.m. Pacific.
First of all, congratulations, because I know you've been working on this for quite some time. Excited to tune into it tonight. The fact that there hasn't been more research, and I guess particularly at the federal level, is it because of the classification of cannabis as that type of drug, or what came first here? I'm surprised to hear that.
It is because of the classification. It is nearly impossible to secure medical grade cannabis specifically for research. When you do, you have to have a federal license. You have to secure the cannabis, usually in safes. We talked to one doctor who's the chairman of the medical advisory board for Tilray, one of the biggest Canadian cannabis companies, and he said that at the hospital that he worked at, he had to reinforce the floors and get a huge safe to put that medical grade cannabis into in order to conduct the research. And he is one of the pioneers, one of the few people out there who actually had the ability to do the research.
Wow, the space is huge. The doc is timely, not just medical, but also all of the people who are trying to get in on this business. I just spoke to rapper Jim Jones, who's teaming up with Alex Todd on a brand, Saucy Farms and Extracts, just talking about how huge the space is. Take a listen to what he had to say.
So if you get the right person from our culture that's known for smoking weed, like a Jim Jones, like a Snoop Dogg, like a Wiz Khalifa, naturally the people was going to trust our judgment when it comes to a brand that they see us backing up and fully supporting about what they're going to smoke. Alex is showing me all about the business from the farmers aspect all the way to where we at now, outside of Wall Street. So it is the money of it has been proven. You got these big companies that don't know too much about actually weed and farming, but they know that there's billions of dollars to be made, so now they're doubling down and investing in it. So I think this is, like I said, probably the biggest thing since .com hit.
Now, he's not really concerned about the medicinal properties so much,
sure.
but very much focused on the business.
There's a land grab right now, obviously, especially amongst the stars. Everybody wants to create this new brand. And so ultimately, the idea is to create the next Apple of cannabis. There are limitations, though, obviously. Without it being federally legal, you have to have redundant operations in every single state. It's not easy to create a nationwide brand that is distributed nationally just because of the way the states are operating. You have to have licenses in every single state that you operate in. So right now, it's seen as sort of the golden era, the chance now to start a brand from scratch. And then when federal legalization happens, if it ever does, then you got it. So unroll it.
Yeah. It's big. We'll see you on TV tonight after your own show. But let's see at 6 p.m. Don't forget. Squawk Ollie's back in a few minutes. Dow's up 208.
When I see off,
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
From the moment I saw you, the last of the litter, I knew you were the one, and would soon hear the pitter-patter of tiny paws on our kitchen floor and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes.
Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Stocks just off a session highs. Dow's up 206. We're still above 2930. Some critical levels there on the S&P. Obviously, we're juggling corporate news, a ton of Fed speak today, and Beige Book in a couple of hours. Let's get to the judge.
Carl, thanks. I'm Scott Wapner, front and center this hour. The great debate on the direction of your money. Stocks higher today, but Wall Street seemingly split on where the markets are heading next. It is 12 noon, and this is the halftime report.
Up, down, or sideways. Wall Street all over the map on where stocks are headed. Where to look for leadership. Forget the Fed and the trade war. The most critical factor many are underestimating when it comes to fears about a recession. The Roku rally. The stock surging more than 400% this year, and it just got a huge upgrade. It's our call of the day. The investment committee is ready to go. Halftime report starts right now.
BNY Mellon, Director of Market Strategy. Great to have everybody at the table today. We begin, where else? The market, stocks higher, but Josh, directionless. That's, I think, the word of the moment. We're down a bunch, then we go up a bunch, and now we're sort of searching for direction. What gets us back to figuring out where we might be going? Please don't. Is it all about trade, really?
Well, it may not be all about trade, but it feels like it's all about trade headlines. And then as we get closer to the next Fed meeting, it'll be all about trade headlines and whatever the Fed remarks are. It's a very mixed market environment. Only 53% of the S&P 500 names are above their 200-day moving average. Only 35% of Russell 2000 names. So large cap is clearly doing you much better than small cap is. But the S&P has really been in a range since the beginning of August. Think about all of that volatility that we had, more headline volatility than actual stock volatility. But 2940-ish seems like resistance. On the Dow, you're looking more like 27,200. But these are the levels that people are looking at. And I feel like everyone's opinion will change based on whether or not we stay below them or once we get above them. You see this all the time. It's not a surprise. So if we do have a breakout above those levels, a lot of people who had been saying, yeah, I don't know, I'm not so comfortable here, all of a sudden they'll tell you, I like this, I like that, I'm buying this, I'm buying that. That's just just human nature. It's the way the ball bounces.
All right, Pete, what gets us out of this range? Whatever you want to characterize it, range, malaise, direction we need.
Yeah, I think it's a really easy answer. I mean, getting some sort of facts about what's going to happen in this trade war.
And can't go anywhere without that?
I don't think so. I think that's what the market's waiting for is we're constantly, look at the movement we get each and every day just based upon one headline, with this headline today versus yesterday. Yesterday we're down 280, we're down over 300, 400 points at certain points of the day, and yet we come back today and all of a sudden some little small cracks come in terms of Hong Kong. They're still going through some negotiations about plenty more. That does not look like that's over, Scott, and yet we're up 200 points. So that gives you a little bit of an idea. You look at this volatility index, and we talk about it all the time. It was trading up above 2021 yesterday, and then here it is, we're pulling right back again. I think you've got to play the volatility index as much as anything right now in terms of when do you see these opportunities? And when you get these sell-offs, you look for the opportunities. You look for the quality names, and that's when if you're convicted enough, that's when I think you can buy. As a matter of fact, yesterday, quite a bit of buying yesterday of various different stocks, just waiting for them to get pushed down. And yesterday was one of those days.
All right, Liz, so if we're sort of, our hands are somewhat tied and it comes down to trade, Citi says, base case, no deal before the 2020 election. So, guide us through what happens between now and at least the end of the year with the market, if that view is correct.
In response to that view, I think we get a lightweight deal at best before the election. I think we do probably need one. Our administration needs one by summer of next year to stay in. Presidents don't typically get reelected during a recession. So we'll do whatever we can to avoid that. But between now and the end of October, at least, we're going to continue to be indecisive. There's way too many uncertainties facing us. The market's going to continue to kind of volley back and forth between up, down, sideways. And I think you just have to kind of stay in it, put your seatbelt on, and enjoy the ride.
Yeah, Jenny, Citi says they're now slightly underweight equities overall. They've cut their overweight in the U.S. down just because of all of the things that Liz was talking about, the rest of the desk talks about, trade, fear of recession. Just too much risk on the table.
Yeah, I think cutting the equity exposure is a mistake because there's just a lack of alternatives, and you really can't find a better place to get the returns that people need for their retirement other than equities. Bonds are just a wasteland right now in terms of yield. But I think
you can still be in equities and reduce your exposure, though, right?
Yeah.
Or you're not suggesting
I'm saying, so
be
what are you
all
going to
in,
sit in? Are you going to sit in cash? Are you going to sit in bonds? I
don't know. Are you suggesting then be all in equities?
You know me. I'm always long, right? So I'd say stay in all equities, assuming that you have a long time horizon. And I kind of look at it like this. You've got a lot of companies with good earnings, right? They're not as good as they were, but they're strong. You've got a strong economy, and they're all fighting under this wet blanket of trade that's staying on top of it, but they're fighting, and they're pushing it up slowly. That's why we're up 18% on the year. That's pretty significant to be up as much as we are with the overhang of trade. So, yeah, if you're in it for the long run, I would not reduce your equity exposure.
Joe?
I think every so often the market gives you an opportunity where you could pick a direction. And I think right now, Josh mentioned some levels before. The president on Thursday, August 1st, tweeted, we lost 29.50. The market has stayed between 28.22 and 29.45 ever since. My expectations were about to break out from that. I think there are things in the marketplace that are indicating that. Energy prices.
Break out, not break down?
No, I think the next 50 handles, and I'm positioned for it, I think the next 50 handles in the S&P are higher.
Okay.
Energy is supporting a little bit here. The U.S. dollar is moving lower. You're seeing some steepening. So listen, I'm not big into picking the overall direction of a market over a 12-month period.
Higher is
but every so often you get a setup. Okay, you get a setup if the president relaxes the tweeting. We don't get any tweets. I think as everyone describes right now, the setup. We've endured September 1st. We've endured a lot of the negativity. I think we could break out of this range. Like I said, I'm positioned. I bought some calls in QQQ, IWM, where we go from there. Who knows?
It's funny. I mean, literally, the tweets, Bank of America looks at it and says, the more the president tweets, the worse the market does. So it's like, maybe, rest the fingers and the thumbs for a little bit, and let's see where the direction of the market goes based on the actual news.
Scott, over the last 3 months, the S&P 500 is up 4.6%. The Dow is up the XLK, the tech, which is why I'm so heavily invested in tech, is up more than double that. And you can pick various time frames, whether it's a 1 month, it's 3% for the S&P versus 5.3 for the XLK. And that's during that volatile August that you and Pete were talking about. So there are plenty. I completely disagree with Citi. I think if you really want to carve yourself up and hurt your portfolio, go ahead. Lighten up right now. That's exactly what you should do if you're listening to Citigroup. And then that's why they obviously don't have a brokerage anymore either. You know, they had to kick that thing over to Morgan Stanley because they did such a poor job.
Dude, I mean, we don't need to dump all over.
Well, we can.
Citi. I mean,
should I be supporting it?
You could disagree with it.
I disagree with it,
but you
heartily.
don't need to soil the firm just because you disagree with their call.
Well,
they're not the only ones who are negative or more cautious on the market.
I was listening to David Kotite
everybody
today.
Else is positive, and they're the only ones on an island.
No, but I mean, I think whether you are David Kotite and from Cumberland Advisors, and you're saying, man, when you get rate cuts like this, and you're going to get more rate cuts like this, you can ask Steve Leisman, but I don't remember that being a bad environment for stocks, Scott. So if you want to say, if you're, for instance, Citi, that this is the time to lighten up on stocks and get more into whatever, go for it.
Well,
I think they're exactly wrong.
Don't we know, presumably, that rate cuts are coming?
Right? Yes.
Presumably that's in the market.
We
and yet
believe.
we still can't get much direction. So where's the big shock? Where's the surprise?
Well, again, I'm back to what is working. You stick with tech. I mean, tech is where you want to be. We've got plenty of examples today that we'll talk about throughout the show, but tech is where you want to be right now. Absolutely, positively, full stop.
The other point of view is that the Fed can do whatever it wants. It's not going to make a difference.
Well,
what do you think about that view?
I mean, there is an expectation that we're going to have rate cuts still this year, that we're going to get another 50 bips this year and 50 bips next year. I still can't justify a rate cutting cycle. I can justify another cut this year, but I want the Fed to at least say, all right, we're done, right? We'll give you this and then we're done. And we need to stop pretending that rate cuts are going to save us from a manufacturing slowdown that's been caused by a trade war. So we have to use the right bullets to fight the animal here. And I don't think that rate cuts are the only thing that we have.
All right. So Steve Leisman's saddled up to the table now.
I heard my name called and I made a beeline.
Yeah, that's right.
When you were going to get your mic on.
But in a positive way.
It's like a bear with a bag of donuts out there.
He's kind of unconvinced, right? Rosengren says he's unconvinced. Liz Young says
can't justify rate hike cycle.
Yeah,
is she on the Fed yet?
Do it. No, but her opinion's a smart one.
Maybe next year.
How tall are you?
Bullard. Hello.
5'4".
Let's get back to the matter at hand. Bullard says should consider 50 basis points. Right, I mean, the stand-up careers.
They're a bit all over the place. Is that your point?
Ago.
Yeah. I never had one. But seriously, there's a bunch of camps. There's the I'm not ready yet. There's the I'm leaning there. There's a let's do it now and the let's do it now. And the let's do it now, I think Bullard's in that camp. He's like, if we're going to do 50, we might as well do 50 now in September. The lowercase now folks are the ones who are at 25 basis points. The people who are leaning there, they want to see it in the data. And the people who are not there yet are the ones who look at the data, don't see it, and don't expect to see it.
The problem is, I almost feel like now you have a debate and you have, a silent debate that we haven't heard that much about in the room about the trade war and whether members of the Fed should take some of the Dudley advice as he doubles down in a sense today, tries to clarify a little bit what he meant the last week as to this is a trade war issue.
Yeah.
Everything else seems fine. Why should we cut rates? I don't know. I feel like there's
I think there's agreement with part one of Dudley, which is that the Fed wants to be careful not to enable or encourage the trade war. And if you look at the tail of the tape, it appears as if they are. Let's go back to the first rate cut. The next day, the president raised tariffs. Let's go back to the Jackson Hole speech. Within the hour of the Powell speech saying, I think I'm going to cut, the president retaliates on China. There's this appearance there. Part one of Dudley is let's focus on the economy and let's not go out of our way or be very careful not to enable trade. There is complete disagreement with part two of Dudley. His explanation today notwithstanding, I don't think it works, whatever he was trying to do, that the Fed should in any way take political or election outcomes into account when setting monetary policy. Period. Full stop.
If you're gonna say we shouldn't enable the president or the administration trade war, in effect, I mean, who cares what they say about that? If the trade war makes the economy worse, they should act, period. End of story.
Right. Okay. That's good. But tell me this. You have to go back a little bit. Let's go back to the time when the market, and I do this from our CNBC Fed survey, 80% of our participants thought there was a deal coming with China. Okay? If you were going to enable the president, and I'm kind of talking loosely here, you might have cut ahead of time to give him scope to hurt the economy from the trade, okay? At that point in time, the Fed, I think it's what it's trying to do, and you remember Powell's answer to my question, which is we're learning as we go here. They don't know how to do this, is they see trade war, they see uncertainty build, they see CapEx decline, they see forecasts come down, they cut. The other way would be, let's cut lots now to give the president lots of room on the trade cut. Let's bring down the dollar to improve U.S. terms of trade versus China. That would be, I think, enabling the trade war.
I'm sure to a person, in part of the thinking is that, look, we've navigated this economy pretty damn well, and the trade war is the real issue to blame. And, be damned if we're going to change our policy to fix what this trade war has done. The other side of that is like, the trade war has done it, so deal with it.
Yeah.
Fix it.
So okay, I would throw it back at you.
Moan and complain about it later.
What would you do? Would you do a quarter in September? By the way, let's not forget, we are all sitting here enjoying the fruits of easing. Right? What was the 10-year a year ago? Where were mortgages a year ago? The market has already eased and eased substantially. So the Fed needs to catch up with the market. But in terms of providing easing to the market, it's already out there and there. So that said, would you say I need to do 50 now because of the CapEx? What the dilemma the Fed folks have is this. The consumer spending is strong. They forecast 2% growth. They have 2% growth. Their inflation, we can debate. They're below the 2% target, but it's 1.6 versus 2. I don't know if I'm going to take my coat and tie off and roll up my sleeves and have an all-out battle against inflation because I'm 4/10 off.
The other issue is what Greenspan talked about today when asked about the likelihood of a recession and the weakening economy, is that the wealth effect from the stock market is being underestimated.
Yeah, Alan's been on that kick for a bit. I agree with some of what he says on that in the following regard. He has changed over the decades that I followed him from the notion that the stock market reflects economic outcomes to the stock market creates economic outcomes. That's a different idea of thinking about it. I will say
Isn't the latter seem to be more plausible at this point?
It is more plausible from a couple directions. My read of consumer confidence is it's way more tied to stock market headlines than it ought to be given the average wealth of people in the stock market of the average person. People freak out when they see the Dow small like this, even if they don't have a lot of money in the market. So that's one aspect of it. And because there's so much more wealth now in the stock market than perhaps there used to be, certainly a percentage of total wealth, that means that it is more determinative.
Stock market is lagging indicator. Stock market is not a lagging indicator. It literally drives the direction of the economy. Anyone that would deny that.
The stock market's not a lagging indicator. Consumer confidence is.
No. Stock market used to be forward-looking. Used to be the way you would predict, because it was it was an amalgamation of everyone's bets for and against what the economy might do 6 months from now. That is no longer the case. We have rearranged society over the last 5 decades to the point where the stock market literally determines what the economy will do. It doesn't predict. Now, it's more volatile, obviously. Dividends aren't as volatile as earnings. Earnings aren't as volatile as prices. There are degrees. But to say that Alan Greenspan has not gotten wiser, I think would be wrong. Alan Greenspan learned a lesson in 1987. It was like 2 weeks into his tenure as the Fed chair. And the lesson he learned was, if I cut rates and save the stock market, that will not spill over into the economy and we won't have a recession. And then he saw another version of that in 2000. We had a massive dot-com bubble, literally caused a recession. There's no other cause. Nothing else happened. And take a look at this last December if you need even further proof. We had a bad Christmas for retail. Why? What changed in the economy from the summer to the winter that would have caused that? Only one thing. the stock market crashed from September into Christmas Eve, 20% bear market, and absolutely that affected the way people chose to spend. And how do we know that? Because look how well everything rebounded once the stock market rebounded in January, February, March. We had a really good spring for home sales. We had a really good spring for retail again. So we know that the stock market now drives the economy. The only question is, what can the Fed do about it, having that knowledge? And I agree with Steve. It's a conundrum. But I think we have to agree that the consumer is only going to be as strong as the stock market encourages it to be.
Yeah, at least to some degree. The question is, what can the Fed can't do anything about?
I would just like to say to my good colleague Josh, I think he's got a point, but I think he overstates it a little bit. I just think that things like jobs and wages and all those things that
emanate
drive
from how stock
consumer
prices
spending
have done. They emanate from yes, 100%.
Josh, just to be clear, I could show you times when the stock market was definitive there was going to be a recession and it didn't happen.
No. We're not saying that every wiggle in the stock market causes
like
economic growth
downturn.
or economic downturn.
We disagree by degree. It's not worth, I think, spending the important and valuable time.
What do you think is a bigger determinant on what the economy will do besides the U.S. consumer? Probably nothing, right?
I would say jobs. People have jobs they don't, and nothing is more important than that. And I think the stock market may be
it's a little chicken. It's a little chicken.
Yeah, we don't have that. But I think you want to just be careful not to overinterpret what the stock market is telling you.
If you follow the consumer data and the 200-day moving average over the last 10 years, you did really well for your investors. If you followed things like industrial production and manufacturing data, you wasted your time. I don't think anyone would disagree with that statement.
Let's just leave the last thought being the market assumes that September's a done deal 100% for the most part.
Yeah, with a 14% probability of a 50, that's wiggling around a little bit.
Feels a little aggressive at this point.
It feels a little
Based
aggressive
on the conversation, no?
Based on where I think Powell is, 50 is enabling trade war, 25 is responding to the economic data as we have it. You asked me for that distinction. I think that's the distinction I want to make.
Does that depend on Friday?
I think Friday is consequential, but I would get ready for getting into a zone of lower jobs numbers. Remember, they reset by 500,000. They took away 500,000 jobs from the year ending March 2019. Means our run rate. And by the way, I believe it was Rosengren who said this yesterday. They restated GDP in 18. They restated jobs in 19. It means the economy may be running a little bit softer than we previously believed.
Should they have done 50 in July rather than waiting?
I don't think so. Not with a 3%, 4% consumer growth.
Okay.
All right, Steve, thanks.
Thank you, Steve.
All right, that's our senior economics reporter, Steve Leisman. Well, the 100th season of the NFL kicks off tomorrow at Soldier Field with the Bears hosting their rivals, the Green Bay Packers. And the man calling the action will be Emmy Award winner and Hall of Fame sports commentator Al Michaels, who joins us now from Chicago. Al, welcome back to Halftime. It is great to have you on.
This is my favorite show. You know that. I love this show.
Love you.
Hey, I love all you guys, but you know, Josh Brown is he's my tout service.
Let's kick
fantastic. Good day in the market today. It's beautiful.
Yeah, let's kick football for a second, and then we'll kick over to what I know you really want to talk about.
Right.
I can't think of a better way to start the season. I have Packers fans at the desk. I've got Bears fans at the desk, and you guys are going to be watching what the league hopes is a great way to kick the 100th season off.
Both teams with a lot of anticipation. You know, every fan base thinks they're going to win this year. You know, the Cleveland fans are over the moon. You know, we're in Chicago right now. The Bears fans, I have to tell you, beyond giddy in anticipation. I can only put it this way. Rick Santelli, who's probably down the block right now, at his inverted yield curve wildest, could not be as over the top as the average Bears fan. They won 12 games last year. You know, they lost on the double doink in the playoffs in the wild card game. They have almost everybody back. People expect them in Chicago to win the Super Bowl. And they're amongst the favorites. But, you know, the great thing about football is you don't know. You don't know how the injury situation is going to play out. You don't know when you're going to get a double doink or not, whether it will bounce the right way over the goalpost. So the great thing about the football season is like, you know, popping open a brand new bottle of champagne and And here we go, and let's take a taste of it on Thursday night, and off we go for the next 17 weeks.
Yeah, a couple of big deals in the last 24 hours. Zeke Elliott back with the Cowboys. Jared Goff gets a massive deal as well from the Rams. Are we back now, Al, to talking about the stars of the game and not those who are kneeling? Is that issue now in the past, which dominated the league last year?
That one's probably in the past. It could rear up again. We don't know. But every time we think we're getting back to football, something else happens. So there's something that takes place off the field, and the fans. It's funny. I'm not saying they relish it, but it becomes a big story. Sometimes the side stories overwhelm the bigger stories, but in its essence, I mean, those of us who love this game, we love the games, and the other stuff